Now, markets flash eerie echoes of 1987's Black Monday crash. The mayhem is already signaling another Black Monday. The carnage in the financial markets unleashed by Trump's tariffs is continuing unabated as equities get plummeted and pummeled. U.S. stocks futures show the over $11 trillion wipeout since Trump's first day in office. That's not over. S&P 500 futures pointed to a further loss of about 5% when Wall Street starts trading. From Sydney to London, investors bailed on any risky assets. Europe's main stocks gauge tumbled 6% into a bear territory, and Asia's index posted its steepest loss since 2008. The broad sell-off fueled already heightened fears of a global recession and raised expectations that the Fed would try to respond. That despite the possibility of stagflation sparked by tariffs would make it complicated for the Fed to do so. The current market crisis is driven by expectations of a recession from the global trade war fallout. But when global economies were set to surge, historic crashes were a result of recession and economic downturns during regular economic cycles, albeit driven by extraordinary events. The most recent market meltdown in history was from the COVID-19 pandemic and that led to panic selling in 2020 to mark the largest weekly drop seen since the 2008 financial crisis. The week ending February 24, 2020 saw a decline of 12% for the S&P 500 and 11% for the Dow Jones. On the 12th of March, the Dow fell nearly 10%, the worst one-day decrease since 1987. On the 16th of March, then, there was a further decline of about 13%. Nonetheless, by May 2020, the stock market had recovered sufficiently to reclaim its pre-pandemic high. In March 2007, the financial firm Bear Stearns shut down and started an impending collapse of the stock market. By September 2008, the value of major stock indices had dropped by approximately 20%. In 2008, the wider market first fell 30% and then rallied on unprecedented global stimulus. But the market soon crashed another 40%. The Dow hit rock bottom on the 6th of March 2009, 54% below its all-time high. Complete recovery from the financial disaster took 4 years for the Dow. The tech-heavy Nasdaq index had skyrocketed from 1,000 points in 1995 to more than 5,000 in 2000. Yet in early 2001, the dot-com stock bubble started to burst. The Nasdaq index hit an all-time high of 5,048.6 points on the 10th of March and then dropped 76.81% to a low of 1,139.9 points on the 4th of October 2002. It took nearly 15 years after 2001 for the Nasdaq to regain its 2001 high. For latest news, download the WION app and subscribe to our YouTube channel.